Are you always wondering how I'm making these profits each and every day whenever I'm trading or whenever I set zones? The market respects most of my zones. In this video, I reveal exactly how I combined pure market structure and liquidity manipulation to make 12,000 US dollars in just one trading day. And in this video, you will learn how to combine liquidity and structure for sniper entries, why most traders lose by misreading market structure, the exact way I use smart money concepts to find high probability setups, my 12,000 trade breakdown explained clearly, and also I'll show you the screenshots of this entry that I took that made me 12,000 US dollars in one day. Don't forget to like, subscribe, and turn on notifications. More breakdowns and real setups are coming your way every week.
Want to trade like the pros? Join my free Telegram channel where I reveal the actual trades we've taken, the powerful strategies behind them, and the results that speak for themselves. It's also your direct gateway to my exclusive mentorship and VIP program, where traders are leveling up fast. Don't miss this chance to learn, grow, and win. Tap the link in the bio or description to join free today.
Without wasting much time, let's get started. Market structure theory suggests that markets move in three phases: uptrend, downtrend, and consolidation. For an uptrend is a phase where the market is continuously moving to the upside, and a downtrend is the opposite of an uptrend. While for consolidation, we don't give it that much time because we don't look for trades in consolidation or in a consolidating market. That means the market is ranging and doesn't have any direction. And you know very well that in an uptrending market, we only take buy entries. And in a downtrending market, we only take sell entries. To determine if the market is in an uptrend or a downtrend, we have to look at the highs and lows of the price. In an uptrend, that means the market will be creating what we call higher highs and also higher lows. While in a downtrending market, will be lower highs and also lower lows. And a market that is forming new highs and lows higher than the previous highs and lows is an uptrend. That means the market that is breaking the recent high and it's creating new highs and high lows, that means it's an uptrending market. And that's the opposite of the downtrend. That means on the downtrend, the market is creating lower lows by breaking the recent lows. And that means the market is breaking these recent lows like this and creating new lows, which means these are break of structures, and that's how we call them. So that means the market has broken to another level, and same as this here, a break of structure, which means the market is creating new highs around here on an uptrending market and a new high lows, and the market is continuing to the higher zones. The next thing that you need to know is that a trending movement is made up of two main parts: an impulsive movement and a corrective movement. An impulsive movement is the one that breaks structure. And while after the break of structure around here, you can see that the corrective movement is formed. And this is the corrective movement that creates the higher low, because now we are in an uptrend. So which means we are breaking a higher high, and then a new higher low is created. And this is the way the market moves. And you should know that eventually trends come to an end. We can define when they are coming to an end by looking at the higher lows if we have been in an uptrending market. Now, let's say this has been our higher lows around here and the market does this. What do you think is going to be happening now? This means the market has created a new impulsive movement on a dropping market or on a downtrending market now, which means we are switching the direction. That means we are going to be looking at selling opportunities when the market corrects back to this zone, and then the market is going to drop like this. So now, we know very well that the market has broken this zone, and then we have created, found a change of character. And that's how it should be looking when the market changes the direction. So I think you can see now the market has changed the direction to a downtrend, which means the market broke this zone in order to retrace back and then drop down. So that is creating a new impulsive move and also a corrective move on a downtrending market. Now that we can understand the market structure, now let's look at liquidity. Liquidity refers to orders or money. Markets move due to orders and money and also transaction that can take place in passing hands in the market. So which means, let's say that we are having a swing low and a swing high. Don't worry, I'll be showing you the real chart example soon and how I took the trade using this. Now, let's say that we are having a swing high and a swing low on this market. And that means that many people who are waiting here, they are putting their stop losses around here. Let's say that means that we are having sellers and buyers around here. So the people who are going to be selling from here, they are thinking that the market is going to just drop down and also take this swing low. And also the buyers who are waiting for the market to come to this zone, they are thinking the market is going to go and take swing high. Now, what happens when you enter earlier? You're going to be taken as liquidity and you're going to be swept. Your stop loss is going to be taken. Now, this is what is going to happen. So this means that the buyer's stop losses and the seller's stop losses are in their zones. Of course, the sellers are going to put their stop losses around here. And also the buyers are going to put their stop losses around here. Now, what is going to happen for the sellers or for the buyers? Now, this is what is going to happen. The market might come and do this. Takes their stop losses. And then after taking the stop losses, the market does change the direction like this, and then the market drops, which is the same thing that can still happen to the buyers around here. And how do we avoid this? It's all about understanding where the liquidity is and where liquidity lies. And after we understanding where liquidity lies, that's when we are going to understand when to take trades. I know most of the times whenever you're trying to take a trade, the market comes and then takes you out of the market. That's what we call turtle soup. And then the market goes to the direction that you wanted it to go. So how do we avoid that? It's all about not trading what we call these common terms of support and resistance. It's all about understanding the liquidity. So when you understand liquidity very well, then you understand what the market is doing. Now, this is the setup module that I want to explain. Most of the times when the market is, let's say, in an uptrend, sometimes it will leave some liquidity below and there will be some imbalance or fair value gap. And we can see very well that the market is breaking to the higher highs and someone else is going to come and then buy from here. And what is going to happen? They're going to be taken out and then the market comes, feels the imbalance and taps in the order block, and then the market continues to the higher highs. And most of people lose a lot of money around here. And that's what we're going to fight. And that's what we are fighting in this video. So make sure you stay and make sure you stick around, because I'm going to explain each and everything that you're going to be understanding. And also, I'm going to show you the screenshots of how I made profits in this trade. Now, on the real chart, we can see very well that the market was in an uptrending mode. And the market was breaking the higher highs and creating breakout structures until the market started to drop like this. And the market coming to down on this down zone, we can see that we had some zone which is not mitigated around here, and this was our order block. And with this market, we are going to do lower time frame analysis. This one is a zone where the market might change the direction from in order to continue to the higher zones, because we have been in an uptrending mode. So the market comes to this zone. Let's play this out and we see, and the market respects the zone. Now, after the market respecting the zone, we can see that maybe you missed an entry around here, and now you're looking for something like an entry to take your buy entry in this market. Now, first of all, you're going to look at the order blocks that are around here to see if any of them will be in line with risk management. If there is no order block that is in line with risk management, then we don't take any trade from there. We only have to do lower time frame analysis. Now, first of all, we can see this zone is having imbalance, and this is a zone that you can buy from. But this zone is risking a lot of pips, 100 and above pips. So you can't take a trade on this zone if you're not having some good money on your account. So what we're going to do is to go on lower time frame analysis, which is 5 minutes. And then we check if we can see a zone that we're going to take a trade from, then we shall mark that zone. Good. Now this is 5 minutes chart. we can see everything around here. We can see the market has swept liquidity below this zone, and we can see that this is an unmitigated order block. And if we can see well, we can see also there is some imbalance or fair value gap and some liquidity not taken yet. And also, not only that, we're having also another zone around here, but this one can act as an inducement zone. Now, after seeing this structure on 5 minutes, I had to drop down to 3 minutes chart, and this is what I saw. Now, on 3 minutes chart, I have this order block around here. We are having liquidity equal lows around here, what we call liquidity pool most of the times, and we are having some inducement also around here. So what I had to do was to mark this order block around here, and I had to wait for the market to come here. Now with this one, I'm minimizing the risks that I would be taking all the way from here up to this zone. And now I'm minimizing my risks to this zone here. Now this is what is going to happen. This I will mark it as my buy zone, or my mid-risk zone as I sometimes call it. And there are many reasons for those mid-risk, risk, and also buy zones. So this one will be my mid-risk zone, and I have to wait from here in order to take my buy entry, but I'll still monitor the market up to when the market comes to this zone. Now let's play this out and we see what is happening.
If you've been jumping from one free strategy to another and still can't find consistency, it's time to change how you learn. I've created an advanced mentorship at skillsfxuniversity.com, built for traders who want real mastery, not recycled content. Inside, I show you exactly how I break down the markets, catch precise entries, and grow consistent results, without indicators or guesswork. And here's the game changer. When you join the Profit Accelerator, you get a free $10,000 funded account. When you join the Mastermind Access class, you receive a free $100,000 funded account. No extra fees. This is for serious traders only. Tap the link in my bio or check the description below to get started today. Let's build your breakthrough.
Now, the market will do this and leave the zone. Of course, for you, you are waiting for your zone. Your zone is having imbalance or fair value gap. It's having liquidity. All you have to do is to sit and wait patiently for the market to come back to your zone. And it's having everything. We are from higher time frame, which was our 15 minutes chart, and it's having breakout structure. The market is in an uptrending mode, but we are now doing lower time frame analysis in order to take a trade. So now this is what I explained in the other entry model that I'm just from talking about. And we can see very well that many people want to buy from here in order to continue to the higher zones. They are seeing the market is in a strong uptrend. But for me, I have to wait for the market to come up to this zone. And I think you remember what I've been talking about on the other setup module. Now, let's wait for the market to come to our zone, and then we take our buy entry. Now, many people will be waiting for the market to come to this zone in order for them to buy. And this is how they end up losing the money. When the market comes to this zone, and this is what is going to happen. The market is going to sweep them as liquidity comes down, and same as the people who will be waiting from here to take a buy trade, and then they will be taken out also by the market, and they will end up losing their money or hitting their stop losses. And that's not what we're looking at. We are looking at we entering after everyone has been entering, or after everyone has entered and they lost their money. For us, we enter after. That's how we trade with the banks. Now, this is what is going to happen. Now, the market is dropping down to our zone. And for us, when we are taking our entry, what are we looking at? First of all, we are having different highs. There is this this internal high, and there is also the recent high, which is the swing high. So this is the zone that you're supposed to be targeting as your recent high. But for now, why I had to look at this as my last take profit was because of this order block, and was because of these break of structures. You never know, anything can happen in the market. So that's why you have to be ready for whatever thing that is going to come. And then this is how I set my buy entry around here. And this was a buy entry that was giving me something like 320 something pips. And that's how I targeted this zone. And now the market came to our zone, as you can see here, tapped into the zone and also activated the zone. As you can see, I'm going to show you the screenshots of this trade and make sure you stick around. So the market moved like this and then did this, hit our take profits. We can see that now we have made 320 something pips. And now someone who is waiting to hit all the TPs will be waiting to make something like 800 something pips up to this recent high. So this is where the market had to come to, because it is a recent high, and that's why you have to follow your trend. And when you follow the trend, that's how you make it in the market. So, and those are the screenshots of my entries that I took of this trade and what I shared in my VIP, because I give them analysis before the entries and then we made those profits. So make sure I subscribe, join my free Telegram channel so that you can access my mentorship, my VIP and all that. You can see how we trade each and every day, and I'm sure this is going to be really helpful to you. And if you have been having that issue most of the times of losing trades because of liquidity, you being taken out as liquidity most of the times, of course, what I can say is that this video can help you out. And also you need to learn, you need to get to my classes and learn more of my strategy, because I have a strategy that is really easy and it's not taking a lot of time to understand it. Just a few months and you're ready and you're set to make money in the markets. And boom, that's how that market hit all take profits. 800 pips and above were made. So guys, make sure you get into my Telegram channel and you'll learn a lot of these things, and soon you'll be a good profitable trader.